So have you joined, Mahalakshmi?
Yes, sir.
Okay, so we are going to start now, and exactly after 10-15 minutes, I'll take the attendance. Okay. So Mahalakshmi, so what I was telling that these two very important parts are basically giving the financial performance of the company before the IPO, justification of the issue price and peer comparison, and the valuation justification and the listing performance. These are very important parameters which you should not miss while carrying your take home assignment. And you should give all possible things which you can and highlight the performance of the company, the valuation justification. So all this will give you a very good, and just compare how the company is doing now after the listing, and then this will give you an edge over others. So please be, just don't copy from chat gpt and just produce the list, the take home paper. It should carry your own original interpretations and your own understanding about the IPO. Okay, so I can always see that if you have just copied, then those things will not come out so well. So if you put your own details, it will carry more weightage. Okay. Then we have the ninth one, Mahalakshmi, please.
So can you scroll down a little bit?
Yeah. The first one is basically the strategic impact and SWOT analysis. Okay. Just read.
In the SWOT analysis, the strengths are that LG is a trusted brand and it has an extensive network, strong cash flows, and debt free. Weaknesses are that dependency on imported components for almost like 30% and limited premium electronics presence. Future opportunities include PLI incentives and export potential and rising smart appliance demand. The threats are that there's high price competition, currency volatility, and technology disruption.
Okay. So this is the strength and weakness of this company. It's a trusted brand, and it has a lot of distribution and retail partners who are selling their products. So it has a great network, strong cash flows, debt free. So debt free was a kind of a strategy. The objects of the issue basically, they're going to utilize some of the money to pay back its debt. Okay, so this also requires a lot of mention in your carry on paper. If the strategies, whether they are able to whatever they mention, are they able to come and do that? Okay, to the till the time after it has been listed. So you can just view their financial statements and understand what they have done, whether they have invested money and for expansion, whether they have repaid the loan. Okay, just check from the financial statements whether whatever they have mentioned they have done it or not. Then weaknesses, depending on imported components. Then the PLI incentive. Now, of course, this particular IPO where these companies, they get the PLI incentives. Okay, so if there is something, a scheme which is run by the government, so you can explain what is the scheme and how they are doing it. And again, like I mentioned, that PLI happened by electronic companies, by like Apple, the mobile companies, they have put their business in India. So if you can just give something extra, it will be of great advantage. Okay, then fine. So key takeaways. Can you read, Mahalakshmi?
Key takeaways: IPO as strategic tool, not just fundraising but a means to enhance brand trust and local identity. Policy synergy: PLI incentives aligned with capital raising for manufacturing growth. Valuation rationale: pricing based on peer PE alignment ensured healthy demand. Governance enhancement: SEBI listing mandates boosted accountability. Timing and sentiment: launching amid consumer demand upswing helped drive success.
Okay. So basically, the it was used as a strategic tool. Basically, they wanted to integrate and have their own local identity. So this would enhance their brand. Enhance their brand. So that was one. Then like policy synergy, of course, because they wanted that government has set up a scheme, PLI. So so that was really helping them to grow their business better. Then valuation, as we know that the company was fairly valued, rather if because of the high growth prospect, it was still giving a lot of money on the table to the prospective investors. Then the governance enhancement, okay, where SBI listing mandates boosted accountability, okay, they got listed. Then timing and sentiment, they launched their IPO at a time when the consumer demand had, was going up. So what was the reason for the consumer demand upswing? Mahalakshmi or anyone? Can you link something with that happened in the environment at that time, October 2025? Why it was very important and the timing was very good for LG to launch their IPO? Was the market sentiment good? Because of what? Srishti? Mahalakshmi?
Sir, is it because of festive season and like
Huh? Which one?
sorry.
So the GST cuts?
The GST cut. Okay. The GST cut basically was a very important policy decision taken by the government, and reducing the GST rates, so which boosted the consumer demand and the festival time. Okay, I mean time of almost like Diwali. So this was a good time to launch a fresh IPO. Okay, fine. Okay, conclusion. Can you read, Mahalakshmi?
To conclude, the LG Electronics India IPO 2025 is a benchmark for strategic financial management in an emerging market. With robust financials, attractive pricing, and favorable macroeconomic conditions, LG India used its IPO to transition from a foreign owned subsidiary to a homegrown listed powerhouse.
Okay, so that's the conclusion. So that when so this is all when there will be a take-home paper. So most of the questions will be asked from the areas here mentioned here only, and you have to reply in the same way. And it has to be in a PPT form as well as in a report form, which will if you give in both the forms, it will carry a more this thing. And I'll give you a lot of time, so you can start working on this project if you have done already your debt this thing mutual funds study and submitted a report. So the last date is 4th. So after that you can start preparing and look for the IPO. First identify the IPO which you are going to give a complete analysis. So even without sharing the general guidelines of the take-home paper, you can start working that you have to give an analysis of any IPO, okay, in India, and give all the details which have been mentioned in this paper, which I have already shared with you on a WhatsApp group. So you can start working on the take-home paper right away. Okay. So any questions here with regard to the take-home paper? Though of course I will be giving a formal guidelines and everything, so it will carry 40 marks. Okay. Any questions so far?
Yes, sir. Sir,
Yeah.
assignment to is project submission or group project submission or individual submission?
No, it is a home carry home paper. So it is an individual.
I'm talking about assignment 2.
Assignment 2, it's a group project. Okay. Fine.
Okay, sir.
So let's talk about the assignment also. Today is first. Okay, and the last date is basically which we have to submit your this thing is 4th. Okay.
4th.
So now we will have 8th is a holiday. I believe there is no lecture. So we have the lecture starting beginning from 10th onwards. Okay. So between 10 to 15th. Okay. Or any date, if it happens between this date, very good. So I'll be fixing a lecture on 15th. Okay. But you can always make your present whenever they are ready. Okay. So groups, I would like that the presentation should happen around 15th of November. Okay, fine. Is that clear?
Yes, sir.
Okay, any other questions, please? So okay, now then, yeah.
I have a question.
Yeah.
Do we have to analyze just LG or can we take any other recent IPO as well?
Which one? Can you repeat your question?
Do we have to analyze just LG's IPO or if we want, can we explore any other recent IPO?
Mananda, I said that you have to all students, 25 students have to choose their own IPOs. Okay, fine.
Okay.
This was just a case study which I have given as a template basically to show that how you can carry a case study. Okay, but you have to choose any company. Some people can choose for example Lenskart. Some students can choose whatever, and all the list is given. There is a site which gives you all the shares, or you can go to Chittorgarh. Okay. So it gives you about a site which gives you details about various IPOs, the latest IPOs which are coming. Okay, and you can go to NSE site also, in which gives you about all the details. Okay, so here you have all the listings, like Lenskart is there. Are you seeing this on your screen?
Yes, sir.
So you have to choose your own, this thing. So there are main board IPOs and the SME IPOs which are there. Okay, so like Lenskart is open on 31st, it will get closed on 4th. Then Midwest, then Canara Life Insurance Corporation, then Rupicon. So you can choose any. So you can choose any, even if it has happened in the past, it doesn't matter. Okay, even if the last 2 years back or 1 year back, you can choose anything which has happened. Like all these are given here. Okay, fine. Like we have BMW Ventures, then we have Anand Rathi, then Atlanta Electricals, a lot of companies, Urban Company, and then we have so there's so many companies. Okay, Bluestone Jewelry. So a lot of companies are there. Lakshmi India Finance, Shanti Gold International Limited. So there are a lot of companies which are coming in IPO, and you can get a lot of details. Okay, because this gives you details about that. Okay, fine.
Right, sir. Got it. Thank you.
Got it. It's your own choice to select. So you can start doing it right upfront. Okay, so you don't have to wait for the formal announcement of the paper. Okay. So let's just do something more. So I was talking about ASBA. Okay. Shristi, is your mic working now? Or Mahalakshmi, can you read?
Yes, sir. The issuer shall accept bids using only the ASBA facility in the manner specified by SEBI. ASBA stands for Application Supported by Blocked Amount, which means an application for subscribing to a public issue or rights issue along with an authorization to self-certified syndicate bank to block the application money in a bank account. Under ASBA process, instead of moving the application money from the bank account of applicant in an IPO to an escrow account, same is blocked in applicant's own bank account, and if he receives shares in IPO, same is released to the issuer company.
Now, basically, this was, earlier what used to happen, we used to, make checks and, sign a checks and directly send to the company's bankers, okay, which will go to the escrow account of the banker, of the issuer. But nowadays, it is done through ASBA, which is called the application supported by blocked amount, where the amount is blocked in your account, okay, and the block is removed or the money is taken, depending upon whether you are successful or not. So I'll just take you to the chat GPT where it was talking about the ESBA. Yeah, I got it now. Okay, just read this, start from here.
Both ASPA and UPI are payment mechanisms used for applying to IPOs and FPOs, but they serve different investor categories and operate at different stages of technological integration. Here's how they differ and when each is used. ASPA, who uses it? All categories of investors, including retail individual investors, non institutional investors, and qualified institutional buyers. How it works: the investor applies through their bank account, ASBA enabled bank. The application money is blocked, not debited, in the investor's account until allotment. On allotment, the amount equivalent to the shares allotted is debited. The remaining blocked amount is released automatically when it is used. Mandatory for non retail investors. Retail investors can also use ASPA if applying through net banking or physical ASPA forms via their banks. Key points: available through most self certified syndicate banks, safer since funds remain in the applicant's account until allotment, no need for refunds, unallotted amounts are automatically unblocked.
Okay, so now you understand that the retail investors, they have, it is mandatory for the retail investors. Of course, they can still apply through ASBA. Okay, when they are applying through net banking or physical forms. Okay, so these are the key points which now UPI. Read this.
Who uses it? Retail individual investors only. Applications up to 5 rupees 5 lakh, which is the limit as per SEBI update in 2022. How it works: used when applying through broker platforms, mobile apps, or online IPO portals like Zerodha, Grow, Upstox, etc. After submitting the IPO application, the investor receives a UPI payment request on their UPI app. The investor must approve the mandate before the issue closing time. The bid amount is blocked in the linked bank account, similar to ASBA. When it is used, mandatory for retail investors applying online through intermediaries like brokers, cannot be used for HNI, NI, or QIB applications. Key points: simplifies the application process, no net banking required, requires approval of a UPI mandate before cutoff, faster processing and integration with broker platforms.
Okay, so this is basically UPI is basically meant and mandatory for the retail investors, and the NI, HNIs and QIVs, they can't use this facility, and it is a simple process. Okay, and so that covers your ASBA and UPI. Okay, UPI is mandatory now. Secure deposit. Now, any company which is coming for an IPO, they must deposit 1% of the amount of the issue size, okay, with the stock exchange. If they meet all the criteria and everything, this money is refundable and money is paid back. This is to ensure that there are serious people who are coming to the stock market, because it's going to take time of SEBI as well as the stock exchange. So they want 1% of the security deposit to be deposited, and it's a refundable. Okay. Now the opening of an issue, the issue requires to open. Okay. So what are the kind of rules with regard to that? Mahalakshmi, can you read?
Opening of the issue. The phrase opening of the issue under ICDR 2018 refers to the point in time where an initial public offering or other public issue becomes available for investors to subscribe to. Opening of the issue, key provisions under ICDR 2018. Minimum days: the public issue must be kept open for at least 3 working days. Maximum days: it cannot be kept open for more than 10 working days for book built issues. Announcement requirement: the opening and closing dates must be publicly announced in advance through newspapers and stock exchanges.
Okay, just hold on. Okay, okay, that's all. Rest you can all read. So I'm just skipping that. Okay.
Opening of the issue. A public issue, both IPO and FPO, may be opened within 12 months from the date of issuance of the observations by SEBI.
Now, after SEBI has given its observations and approved the offer document, then within 12 months the IPO or FPO should be open. It can't be that they can wait indefinitely. So normally the companies immediately go for an IPO issuing opening of the issue, but they can wait up to 12 months maximum. Okay. Now, why they are going to wait? Sometime the market sentiment may turn out to be bad, and the stock markets are falling, so they may choose the right time. Wait for the right time to launch their IPO. If they've got the approval, they can wait for that time. Okay. Okay, just hold on. No. Okay, so now we come to the underwriting. Because the new issues which are coming, they should be underwritten. Some other companies, they get their shares underwritten from the merchant bankers. In case if they don't get much response, okay, so then the merchant bankers are going to fund the company. They are going to take the shares of the company. So it gives boost to the issuer basically, and the investors feel very confident that these shares have been underwritten. So it's a very confidence building exercise on part for the part of investors and for the company. Okay, read this.
Underwriting. For non book built issues or fixed price issues, underwriting is optional. If the issuer chooses to underwrite, it must appoint underwriters as per SEBI Underwriters Regulations of 1993.
Okay, so underwriting is for non-book built issues. Like for example, you are already fixing a price, which means the company is highly profitable. It has met all the criteria, the financial criteria for the IPO. The underwriting is optional. Okay. Then if it chooses to underwrite, then it must appoint underwriters as per the SEBI's underwriting regulations 1993, which are nothing but the merchant bankers or the syndicate bankers who can become the underwriters. Read this.
For book built issues, underwriting is mandatory. The issue must be underwritten by lead managers and syndicate members. Uh, QIB proportion cannot be underwritten. At least 75% of the net offer must be compulsorily allotted to QIBs, and this portion cannot be underwritten.
Now, the portion which is not underwritten by the portion which is, being subscribed by the QIBs, like, in case of a company which are not profitable, which is not meeting the criteria, there, the company must offer at least 75% of their shares to the QIBs. So that portion may not be underwritten because the QIBs are anyway going to, take those shares. So only the portion which is, being offered to the public, which requires to be underwritten. Okay, so I'm just now skipping all this slides for the underwriting.
Meaning of
Oh,
minimum
just hold on. Minimum, minimum. Okay, just read.
Meaning of minimum subscription. Minimum subscription is the minimum amount that must be raised through a public issue in order for the issue to be successful and for the securities to be allotted. If the total subscription, including all categories, is less than the minimum, the issue must be withdrawn and the application money refunded to investors.
Okay, so that means there is a minimum subscription kind of a criteria where all the companies, they must get the minimum subscription. As we'll go further and understand, at least 90% of the issue size should be subscribed. If it is not done, then the money has to be refunded back to the investors. Okay, read this.
The minimum subscription to be received in an issue shall not be less than 90% of the offer through offer document, except in case of an offer for sale of specified securities. In case of an IPO, the minimum subscription to be received shall be subject to allotment of minimum number of specified securities, which stipulates that at least 25% of each class or kind of equity shares or debentures convertible into equity shares issued by the company was offered and allotted to public in terms of an offer document.
So, at least 90% of the is called the minimum subscription. So, whatever the issue size, at least 90% should be, this thing. Okay, now the second clause says that at least 25% of the shareholders should be public. Okay, so 25% should be offered to the public. Okay, fine. So this is the minimum subscription, and in total, so far in the history of the IPO, there are about 2 or 3 companies where companies could not collect 90% and they had to refund. So I'll share the names later on. Exceptions, yeah. Okay, these are the exceptions. Okay.
Underwriting. If the issue is underwritten and the minimum subscription is not achieved, the underwriters must fulfill their obligations to subscribe to the shortfall.
Now, in this case, the minimum subscription is not applicable. If the IPO or FPO is underwritten, then even if 90% is not collected, then rest of the money will be given by the merchant bankers, underwriters. So in that case, these are the exceptions. Okay.
Offer for sale. In an offer for sale where existing shareholders sell shares, The minimum subscription rule may not apply since no new funds are raised by the company.
So if there in an IPO there is an offer for sale, so to this part the minimum subscription will not be applicable. Okay.
Rights issues governed separately under Chapter 3 of ICDR regulations.
So even the right issues don't come under the minimum subscriptions. Okay, fine. Okay.
Oversubscription. In case of an oversubscription, an allotment of not more than 1% of the net offered to the public for the purpose of making allotment in minimum lots.
So if there is an oversubscription, like most of the cases it happens, so the money has to be returned. If the, like we saw that LG was almost 10 times oversubscribed. So they can't retain all the money. So they have to refund all the money and keep only the money which was the size of the issue. Okay, but they can always have 1% extra. Basically, this is for making allotment easier, because each sub shareholder or each investor should get at least they should get the shares are allotted in minimum lots. So because they are going to be allotted in mini lots, I mean lot size, so 1% can be used there. Okay, so they can retain 1% of the oversubscription, but that should be only for meeting the purpose of allotment to the extent of lot size. Okay, fine. So now just one more thing I'm just going to say. So there is a monitoring agency. Whenever the IPO is done, so a monitoring agency is appointed, and they are going to they are appointed only if the issue size is more than 100 crores. Okay, and the monitoring agency shall submit the report to the issuer and the stock exchange that how the money has been utilized, what was the object of the IPO, where the company was supposed to spend the money, how is it spending. So this is kind of a report which has to be submitted by the monitoring agencies to SEBI as well as to the stock exchange. Okay, so generally the credit rating companies in India, they are appointed as monitoring agencies. This is to ensure that the IPO and FPO, they comply with their objects. Okay, so the last slide, and then we have the attendance. Okay, so
Allotment.
yeah, just read.
Allotment procedure and basis of allotment. The allotment of specified securities to applicants other than to the retail individual investors and anchor investors shall be on a proportionate basis within the respective investor categories. First, which is institutional investors or QIBs, non-institutional investors or high net worth individuals. Third, retail individual investors, and fourth, anchor investors.
So as we can see that there are four kinds of categories. One is called the institutional investors or qualified institutional buyers. Okay, so some portion is reserved for the QIBs. Now, in case of a company which is not profitable, okay, and it still wants to, and it's not meeting the norms of the ICDR, they can issue 75% shares to the QIBs. Okay, so there is a one kind of a category of the investors. Second is the non-institutional investors, the NIIs. Okay, in short, so they are high net worth individuals. So they can also apply. So there some portion can be reserved for them. Then, so we will understand what kind of a reservation, what are the rules regarding the reservation, but slightly later. Then the retail investor categories. So they can apply up to only 2 lakh rupees. So that is the normal janta, normal public. They are called retail individual investors. And the fourth is the anchor investors. So normally these are the shareholders or the investors which are given the shares at the first go. Before the IPO opens, one day before, the anchor investors are allotted their shares. Okay. So they are the anchor investors, the first people who are going to get them the shares. Okay. Okay. So I'm just looking. So this price band we will do on Monday. Okay. So what I'm looking at is one last one before we can just. So this is the last one. Okay, we'll finish the lecture at this. So they are, under the issues can be done under regulation number 6.1. If you look at the first column under regulation number 6.1, under regulation number 6.2, and the third one is fixed price issue. So 6.1 is basically, where the company has fully met the criteria. It has the net worth, it has the operational profit, all the financial parameters are fully met. Then it is called, the issue under regulation number 6.1. So I'll ask you to just read rule number 6.1, regulation number 6.1 on the ICDR, which I've already shared with you. Okay. Then 6.2 is basically where the companies are not profitable, like Zomato or Paytm. Many companies, they didn't have a track record of profitability. So then they can issue shares on a book. Nowadays, all the companies are using book building route. Okay, whether they are profitable or not. But the company which is not profitable, they have to do it through the book building route. Then the companies which are profitable, they can issue straight away, give a price, fixed price. Now let's talk about the first case where it is done on a book building where the company is profitable. When the company is profitable, they have to offer 35% or more to the retail investors. So at least 35% should be offered to the public. Okay, even they can be offered more. They can even go up to 100%, or rather 35% more. Okay, non-institutional investors 15% and more can be given to the NIIs. Qualified institutional 50% or less. Okay, and out of 50% or less, 5% should go to the mutual funds. Okay, and the anchor investors up to 60% of the QIB. Now QIB, the anchor investors are nothing but the QIB itself. Okay, so 60% of the QIB portion can be given to the anchor investors. So we have four categories: RI, non-institutional investors, qualified institutional buyers, and anchor investors. So if the company is profitable, then more than 35% or 35% at least should be given by the retail investors, and less than 50% should be allotted to QIBs. If it is, now we come to the second category where the company is not profitable, like cases of Zomato or ATM, where the company has not made any profits in past, they are not meeting the criteria. If you read the third one, QIBs, more than 75% should be given to QIBs. Otherwise, the amount has to be refunded. Okay, that means if they are not given more than 75% to QIBs, then whatever amount they have collected, they have to refund it back. Then retail investors should be given less than 10%, because here the company is not making any profits, just to make sure that they are not at risk. So less than 10%. Non-institutional investors less than 15%. Okay, and up to 60% of the QIB portion can be given to the anchor investors. Okay, now my question is to all of you, that if the company is not profitable, how much can be given to the retail investors? What is the maximum limit? Mahalakshmi, Shrishti, Ashwin, anyone? Mananya? Or should I repeat the question?
So I think you said 10%.
It is 10%. Who said that?
Daksh.
Daksh, very good. So now we move on to attendance, please.